Coming to the next problem, income from salaries. This is problem number 35. This is essay type question, as well as most of the important informations are required to calculate in this problem. Right? This is a full-fledged problem, and you can expect this question, this type of a question in examinations, irrespective of the university or the college. You can expect this type of a problem. See, in this, you are given with almost all the informations required for the salary income is given. Okay, basic salary, that you know very well. Basic salary given for a month, so you should take it for the year per annum. So 25,000 is a monthly salary, 3 lakh rupees, that comes to 3 lakh rupees for a year. And dearness allowance, that comes to 5,000 rupees per month. So you will have to take into 12, 60,000. Please, in this, please put a point on in the question. 5,000 per month and 3,000 per month enters into service benefit. So, for the calculation of RFA, RPF, etc., you should take 3,000 into 12. Whereas, for income purpose, you will have to take 5,000. Okay. So, what is the difference? 3,000 is the amount of DA enters into service benefit or pay benefit. Whereas the total amount of DA, we have to take it for salary statement. Then bonus, it is taxable. Salary in lieu of leave, that is also fully taxable. Then entertainment allowance, we have to take it for salary income. And here the point is, entertainment allowance is exempted based on the condition only for government employees. In this case, the person assessee is not a government employee, it is not specified in the question. So, the amount of entertainment allowance is taxable. Even if it is a government employee, if he is a government employee and if it is exempted, you can claim the exemption only after calculating the gross salary. Okay. Then, reimbursement of conveyance, that is not taxable. Then, in here it is given as reimbursement of conveyance expenditure in performance of duties. So, only for the official purpose. So, it is exempted. Then, value of RFA, rent-free accommodation. If the rent-free accommodation is given, so what you will have to do? You should see where the accommodation is provided, in which city, who is the owner of the accommodation, whether the company is the owner, that is the employer is the owner, or hired accommodation. So all those things you will have to consider. So as far as that rent-free accommodation is concerned, first we have to take the salary for RFA. Basic salary, dearness allowance, enters into service benefit, rent, rate, fees, etc., bonus, all those things you will have to taxable allowances, all taxable allowances. In this case, only entertainment allowance comes for taxable allowances, right? Any other allowance given in the question? No. So, only entertainment allowance is available. So, all these things we have to take. That comes to 3,74,000. On that, 15% we have to take. Why 15%? Because this is not the own accommodation. The rent paid by some sort of nominal rent paid by the employee. So, it is a here, yes, this is the own accommodation only. And in this case, where the accommodation is provided, please have a look on that question. The accommodation is provided in Chennai. Population is about 25 lakhs. Okay. So, since the population level is about 25 lakhs, what is the percentage of taxability for RFA? 15%. Okay. So, that comes to 56,100. And cost of furniture is given, own furniture 10%. Right. So, in that way, we have to take furnished RFA. We should calculate minus the rent paid by the employee. This is not the rent paid by the employer. This is only rent recovered by the employee. That is 3,000 rupees per month. That comes to 36,000. So, balance of taxable accommodation value is 51,500. So, we have to take that 51,500 is value of furnished RFA. That we have to take. Furnished RFA at concessional rates. Okay. Then another one is club bills given and club bills paid by employer. So it is taxable. Club bills paid by the employer. So any payment paid by the employer on behalf of the assessee, it is taxable. So that we have to take. Then RPF, employer contribution for RPF. How will you take RPF? What is the condition? In excess of 12% is taxable. So basic salary given 3 lakhs. Dearness allowance, total dearness allowance is 5,000. On that only DASB comes to 3,000 rupees. That we have to take. No commission on turnover is available for in this question. So the total amount of these things 3,36,000. 13% is the RPF. So 43,680. But what the condition says, RPF is exempted in excess of up to 12%. So in excess of 12% is taxable. So for 3,36,000 into 12%, that comes to 40,320. So the taxable RPF is 3,360 only. Okay. Then another one is reimbursement of medical expenses. Please put a point on this question. Reimbursement of medical expenses. Already I told you, reimbursement of medical expenses is taxable. Whereas, if it is the notified disease in a government hospital or in a government notified hospital, notified disease, it is exempted. So, in this case, that reimbursement of medical expenses in respect of notified disease from an approved hospital, so it is exempted. Okay, the total of these things comes to gross salary. On that you can claim the deduction under section 16(1), that comes to 50,000. And another one point you should see in this question is entertainment allowance. Entertainment allowance is eligible for deduction under section 16(2), whereas here that nature of employment is a private employment, non-government employee. He is a non-government employee, so he cannot claim the deduction under section 16(2). Another one you will have to calculate, the person has paid the premium for his own life, for the life of the wife, major son, and he made some contributions for ELSS, then Provident Fund own contribution he is having, okay, Public Provident Fund own contribution he is having. So these things are qualified for deduction under ATC. So what we have to do? We have to list out these informations, and that comes to 1,34,680. So that is also the eligible deduction under ATC. No need to deduct this from the gross salary because this ATC is qualified for deduction only from the total income. Here in this case we are calculating only the salary income. So we have to list out the deduction under ATC and we have to show the total salary income, that is chargeable income. Gross salary minus all the deductions, total amount of chargeable salary income we have to show. Deduction under ATC, that should be listed out separately.